This is the Southside School of Financial Freedom Watchlist and Market Report for the week ending October 15th, 2022. Our question this week is, what is the Plunge Protection Team? The answer will be provided later in the video. This week, the market ended lower. The Dow Jones Industrial Average decreased minus 1.34% on Friday, but was up 1.15% for the week. The S&P 500 decreased minus 2.37% on Friday and was down minus 1.55% for the week. The Nasdaq decreased minus 3.11% on Friday and was down minus 3.11% for the week. Looking at the week, we can see that there were 4 up finishes versus 11 down finishes for the major indexes. On Monday, Wednesday, and Friday, all the major indexes finished down. On Tuesday, the Dow Jones Industrial Average finished up, while the S&P 500 and the Nasdaq finished down. On Thursday, all the major indexes finished up. The new unemployment claims were 228,000. Inflation increased 0.4% in September. Wholesale prices also rose 0.4%. Consumer spending was flat. Mortgage rates soared above 7%. The British pound jumped 2% higher, and the 10-year U.S. Treasury yield topped 4%. New unemployment claims, inflation increasing 0.4%, wholesale prices rising 0.4%, flat consumer spending, mortgage rates soaring, the British pound jumping higher, and the 10-year U.S. Treasury yield topping 4% are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down are virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day or even every week, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will go up when the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the President, and Congress. These 5 entities will do what they must to drive the market higher. Now we are at the question of the week. What is the Plunge Protection Team? The Plunge Protection Team is the nickname for the Working Group on Financial Markets. The group was created in 1988 by President Ronald Reagan after the infamous October 1987 market crash known as Black Monday. The group advises the president on how to enhance the integrity, efficiency, orderliness, and competitiveness of U.S. financial markets and maintain investor confidence. The working group consists of the Secretary of the Treasury, the Chairman of the Federal Reserve, the Chairperson of the Securities Exchange Commission, and the Chairperson of the Commodity Futures Trading Commission. Some financial analysts believe that the Working Group on Financial Markets does a bit more than just advise the president. They believe the group actively intervenes in the market to prevent the market from dropping. That is, they protect the market from plunging in times of market instability. Now, how the market soared on Thursday, closing more than 800 points higher for the Dow after being down 500 points early in the session? Do you think the Plunge Protection Team propped up the market on Thursday? Do you think they prop up stocks at all? Do they prop up your stocks? Or do you own any stocks? If not, why not? Is it because you do not understand anything about the stock market? Well, it was not taught to you in school. If you ever want to learn how to get wealth and income through the stock market, you are going to have to teach yourself. You must RSI. That is, read, save, and invest. formal school taught you how to read, but society and the powers that be discourages you from reading, especially books. School taught you to be a worker. They did not teach you how to be an investor. And they taught you absolutely nothing about the U.S. financial system. You can learn how to be an investor if you simply start reading books about investing. Books that you can borrow from the library for free or buy cheaply online. It is not difficult to learn how to be a passive investor, which is what most people should do. Check out this list of recommended books on the books page of the Southside website. These books and others like them will not tell you which direction the market is going to go, but you can learn how to make money in the market no matter what the market does. I don't know which way the market is going to go on a daily basis, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or sideways. How do I do that? I apply the Southside strategy. You can learn more about the Southside trading strategy at southsideschooloffinancialfreedom.com. Here is the Southside trading watch list from the week ending October 15th, 2022. The strongest performer on the list this week was Enterprise Products Partners, ticker symbol EPD in the second column. It was down minus 0.28% on Friday, but was even for the week. Enterprise Products Partners is a provider of midstream energy services to producers and consumers of natural gas liquids, crude oil, petrochemicals, and refined products in North America. The company business segment include NGL pipelines and services, crude oil pipelines and services, natural gas pipelines and services, and petrochemical refined products services. Looking at a summary of results, you can see that Enterprise has increased 13.8% year to date. I did not trade Enterprise this week, but I may trade it in the future. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do you do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? The Southside Portfolio Cash Flow System is outperforming the S&P 500 Index ETF SPY. The Southside Portfolio is down minus 2.9% versus minus 24.7% down for SPY, a difference of 21.8%. The Southside is beating SPY by almost 22%. The cash flow generated by the Southside Cash Flow System for this week was 4.23% of the portfolio account value. The account value changed by 3.65%. Meanwhile, the S&P 500 ETF SPY changed by minus 1.42%. Bitcoin Watch, Bitcoin loss, minus 1.65% this past week, and it continues to be in a bear market. It is down just over 72% from its all-time high achieved in November 2021. I sold option contracts on two positions this week. They were both puts that ranged from $41.35 to $54.69. You can get more details, including the total dollar amount of cash flow for the week, on the website southsideschooloffinancialfreedom.com. To increase your financial IQ and understanding of the stock market, please check out past videos for other questions of the week. The videos are organized in playlists levels 1, 2, and 3. Level 1 being for beginners, level 2 for intermediate, and level 3 for more advanced investors and traders. The videos are also arranged in playlists by subject matter. In the meanwhile, please like, share, and subscribe.